Hello, everybody. My name is Drew Dosick, and welcome to Trading the Close. Welcome back to the markets. Hope you all had a fantastic weekend. And back to the action we are. And guys, the markets are lifting up today, almost like nothing's going wrong. Markets are just continuing pushing higher. Incredible push, especially led by semis that could have staying power. We're going to get into that here in a little bit. Jerome Powell this week does speak tomorrow at 12:30. That could move some markets, so be anticipating that. Aside from that, we do have more reporting coming out on Thursday. We've got some GDP numbers hitting the markets at 8:30 in the morning. And then Friday, we will have some additional more reports. And that will mainly be the core PCE month over month. So we'll see that come Friday at 8:30 in the morning. There's the financials for the week. Aside from that, let's jump in to see what happened today with the market summary board. So you can see here, we've got the Dow Jones up 0.34%, NASDAQ up 0.63%, S&P 500 up 0.56%, U.S. oil basically flat, down 0.1%, gold rocketing to new highs, guys, up here 1.72% push higher. Incredible move on gold. Bitcoin is under pressure, though. Risk on for Bitcoin, and hasn't reached our measured move and is vulnerable of breaking, potentially negating that measured move. I'll get into more of that here in a little bit. But first, let's check out the S&P 500 heat map. We see here we've got two big, huge stocks leading the charge today. And it's really kind of deceiving. As you can see, these two big stocks, Nvidia and Apple, carry so much weight in the S&P 500 as well as the NASDAQ QQQ that has really elevated the market. Meanwhile, some of its other competitors, we've got Google, Meta, and Microsoft all down on the day, roughly about 1% each. ANET down 2.67, AVGO down also 1.56. But these two, combined with Oracle, have really held up the markets well today and pushed it higher. Tesla's up almost 2%. Great push on Tesla, too. Aside from that, there's a lot of mixed stocks in here. We've got some reds, we've got some greens. But really, these two companies are pushing the market forward and really leading the way, creating a wake where the rest of these other stocks are starting to lift up ever so slightly from their selling pressure that occurred earlier today. So let's jump into the S&P 500 and see where we are at. Guys, we are comfortably within this inclining parallel on the top of the screen. That now makes this area on the chart, which is at 6,624, a support area on the chart of the SPX. It's truly remarkable to see this move up, folks. Also, what that does imply is the next major resistance is all the way up here near 7,000 points on the SPX. You can see here the 50% area is right around 69.61. So that's a mammoth move up to continue pushing up higher, roughly 300 points on the S&P 500. Can that happen this year? Uncertain. I'm still waiting for, folks. We have not, ever since this April decline, we have not had a 5% pullback. That's very unusual in the stock market, lasting this long without any sort of 5 to 10% pullback. That would make more sense to keep pushing higher, but we are where we're at. And so we at least need to evaluate where the next levels of resistance are going to be, which is what I pointed at, basically right around the 7,000 point mark on the SPX. Now, one other thing I want to point out, if I flip over to the spiders and I flip on the volume, now this is a tradable ETF for the S&P 500. And you can see down here at the bottom of the screen, we've got pretty low volume. Now, yeah, it's not extremely low. It's not half of what normally would be, but you expect a major breakout move like today should carry volume with it. And since it's not carrying volume, that's telling me this is likely not a push propelled by major institutions. It's a lot of other smaller institutions, smaller retail investors that are continuing to push the market up. Thus why we have lower volume. Roughly right now it's 61.3 million shares. You can see just on Friday, that was an options expiration date, but you see we had 97 million the day before, 90 million the day before that, 100 million. And so we're right back down to a lower range of volume with price accelerating up, which typically for a breakup, we're going to need to see volume. So that's a little puzzling for the staying power of this particular move. Next up, we've got the Qs. Now the Qs here, as you see on Friday, we closed perfectly right at this resistance inclining trend line that you see displayed out on the chart, taken back from a pivot from December of last year. Today, we're starting to fight to get above it. That means tomorrow we need to see if we can close above this candle, 602.87. That would bode well near term for the Qs, which would then flip this resistance at $600 on the Qs into support. So tomorrow is critical for the staying power of this near-term breakout that we've got going on the Qs. We'll be watching that very, very closely tomorrow. Next up, the SMH. SMH, as you see here, accelerating higher. Now, guys, I do want to remind you all, especially if you're tuning in fairly new, SMH and the semiconductors typically lead the markets. They lead the markets pushing forward. And if they start selling off before the rest of the market sell off, they typically lead the market down. Well, now with the SMH pushing up, making another new all-time high, that tells me this move probably does have staying power. So again, mixed signals. Spider's saying we don't have a lot of momentum and volume behind this, but then the SMH is showing that, guys, look, we're continuing to move up. We're starting to get these mixed signals, which can happen towards a top, but at least for right now, the SMH is saying we're going higher. I have another risk on indicator saying we're going lower. So it is literally a fork in the road at the moment. So let's move right along and let's get into the IWM. IWM, not too much to report here, except for we did achieve reaching the previous all-time highs this last Thursday and Friday on the chart. Beautiful move up, but I did also bring to your attention last week on Thursday, we now have a beautiful inclining parallel channel to monitor the price action on IWM. If I flip over to the 10-minute chart, you can see here when price was fighting to get back above in the top 50% portion of this parallel, right here, we were pausing, broke out, and now have since closed up in this 50% area of the parallel. That's good for the near term on IWM. Let's see if we can't get any sort of continuation move to push up, get above these all-time highs and close above the previous all-time highs. Doing so, that would then flip the probabilities to a higher move up on the IWM. Great move though on that chart. Next up, Bitcoin. This is the other risk on indicator. Usually if Bitcoin's starting to surge up on the charts, the rest of the market will follow and move up higher. Now, I don't see this surging at all. Matter of fact, I see a massive plunge breaking through the support that it's been held at for the past week and a half, then also breaking through the neckline of this inverse head and shoulders pattern with a measured move up here to $119,391. This tells me that if we close down underneath this neckline at $113,183 tonight at 8 o'clock Eastern time in the US. If we close beneath that, that then now shifts probabilities for a further move down on Bitcoin, Xing out this measured move of $119,000. And then we could be going down lower, potentially as low as this declining trend line where we did catch support on the last move down onto that trend line. You can see here, should price come down in the next few days, that area would be $106,507. Now, so why this is so critical, you can see what's going on over the weekend. I drew another trend line, basically a horizontal trend line, slightly declining here on the chart. This was creating a potential another inverse head and shoulders pattern, which would have a measured move to new all-time highs on Bitcoin up here at $127,636. We're getting this one candle right now that is putting all of this in jeopardy, all of these targets moving up. Closing tonight will be critical, as well as the follow-up move tomorrow. Where is that going to take us? Is that going to negate these potential possibilities? Or is this going to be just simply a quick test candle down and a reflex bounce right back up, marching up on the charts? Very important to watch this Bitcoin chart in the coming days, as that will help also give us insight to the rest of the markets. Now here, a peculiar thing, S&P 500, all-time highs, guys. Gold, all-time highs. You know how many times that's said in history? Well, in the most recent history, pretty frequently, but besides the last couple months, basically never, folks. Like gold runs almost opposite to risk on scenarios. Gold's a hedge, right? But investors are realizing the stagflation is likely going to be sticky and are still attracted to gold simply because the fiat, the attraction of fiat, the US dollar, the European pound, the UK pound, whatever, it's eroding. The values in that are eroding, and people are finding safety in gold, pushing it to 37.47. Incredible move. Should this reverse, first support 35.56, followed by, if we move higher, all the way up here, $4,000, folks. You can see that inclining trend line. It's not going to get there in a straight shot. It's likely going to take several days. And if it takes us all the way over to October 15th, we're tagging $4,000 per ounce on gold. Man, that's remarkable, especially with this move and also the previous moves on the charts of gold. I'm not putting anything past it. This thing's behaving more like a tech stock than gold itself. Truly remarkable. All right, next up, we've got silver. And you see here, silver pushing up as well, following the links of gold. We're next resistance at $44.26. We're very close to tagging that. Beyond this $44.26 level, or $44.26 level, we've got the previous pivot from 2011 up here at $49.83. You can see just like how we got above this resistance level, we could get above, maybe come back down, test this level, consolidate. And if we do so, then that opens the door up here, folks. Basically $50 an ounce on silver. Remarkable move. Tracking this too all through the progress. Any sort of deviation from this upward momentum will catch support at 41.66, the previous resistance area, followed by this inclining trend line at $40.80. Next up, U.S. oil still just meandering down here in this bearish consolidation. At least the bulls out there can be happy for U.S. oil. It did catch support on this declining trend line, but basically, guys, this has been a broken record. It's been happening over and over and over again. We've come and tagged it, and have since bounced up every single time. This now has become Swiss cheese and can easily be broken through. Next level of support, $59.50. That's where I think you should see a solid support level for a potential bounce up on U.S. oil. Next up, nat gas continues to trace this declining trend line. Now, we accelerated away from it today. We'll see if we get a corresponding bounce tomorrow to continue this consolidation along this trend line. Tomorrow's candle will be very important, as that will erode this declining trend line and also increase probabilities for a breakthrough. So tomorrow's candle, we'll watch that closely. Support, though, isn't far away either, right here at $3.01 right there on the chart. Next up, 10-year. This is peculiar, folks. You see, we did announce last week, Jerome Powell is cutting rates, right? He's cutting rates, going to be reducing potentially 2 more cuts this year and another 1 cut in 2026. We'll see if anything changes when Jerome Powell speaks tomorrow. But after that announcement, the 10-year yield is going up. So what is that telling us? That telling us is, again, a little bit of mixed signals. The 10-year yield should be going down, especially with the forecasting of new cuts on the horizon. However, we're bouncing up, also implying that this tariff and also inflation, the tariffs will cause inflation. The stagflation will be sticking around. Investors foresee this out on the horizon. And even though we have rate cuts, the 10-year yield continues to march up, telling us a little bit different story that investors are seeing, saying that this stagflation will be a problem in the near to midterm for the markets and the economy itself. Next up, we've got Nvidia. Now, Nvidia did announce they are going to be investing $100 billion in OpenAI. Investors love that and have ripped Nvidia higher. Now, one asterisk by this news is that Nvidia is actually going to be investing this $100 billion, but starting with $10 billion next year in 2026. So that's nothing that's going on right now, yet the stock ripped up higher, up nearly 4% on the day. Next areas of resistance, we've covered this the other week. This is going to be very strong resistance on Nvidia. We're right around $109.07, followed by this inclining trend line, roughly basically at the $200 even number. Both of those areas, especially since we have those resistance levels, one right after the other, will be very difficult for Nvidia to get through without proper consolidation. That will also take likely this long on both of these resistance levels. Next up, Teradyne, TER. Look at this nice pop on Teradyne today, up 12.79%. Now, Teradyne is involved with advanced robotics and recently had some analyst upgrades hit their stock, which has elevated it up as high as you see today, blowing through 2 different levels of resistance. Now, one, we were poking and consolidating through this area over the past couple of weeks. But it's important to note we did break through this. And then it broke through the next resistance level with this huge push today. Mammoth push on TER. Next resistance, should we keep marching up, is up here at 142.35. But check out this RSI on the daily. We are now over 70. So even though we've broken out, consider this, we've done a double breakout. That's exhausting the efforts. Even though we're closing near the top, that's exhausting the efforts of the investors to push through these resistance levels. Should we continue up with another leg up tomorrow, expect a lot of resistance right here at 142.35, likely to pull price back down at least to this inclining trend line, potentially as low as where price broke out from down here at $121.92. Ultimately, once it fights through this near-term overbought scenario, I do see TER marching up higher on the charts up here to this 155 declining trend line. $155.60 is where that is located. Next up, we've got Rigetti. Now, Rigetti in the quantum space, guys, really was on fire today, except for right out the gates. Look at this. Right out the gates, we had an open up, a gap down, and price was all the way down here, 10% down on the day for Rigetti. Now, we did close the day down 0.53%, but look at how well it fought to get itself back up in this range, tagging these previous pivot highs. So what does this tell us? That tells us Rigetti is having some difficulty reestablishing itself back up inside this inclining parallel channel. Clearly see that. We've closed now in it 2 days in a row, but we haven't accelerated up and continued moving up in this parallel. So tomorrow, be watching for a close above $29.09. That will then open the door for a move up here to $32.53. Also, if for any investors that have missed this, guys, no fret. Don't worry. Don't be FOMOing after stocks. They always pull back and give you another opportunity. Right here on the chart of Rigetti, I'll show you where that is. So you can see very similar to the previous chart on TER. We've gotten a double breakout through all of these trend lines. Now, it didn't all happen in one day. It's taken several days for that to happen. But what this means, though, is if price comes right back down here, in essence, right into this cradle, you see I've got two inclining trend lines that correspond right here in this range, followed by this third inclining trend line. This creates a pocket zone of support just under $24 on the chart. Should be a great buying opportunity for continued upside movement on Rigetti if it has any staying power. But right now, the main test for Rigetti is this parallel channel. Any investors wanting to get into this eventually, put a reminder over here, just like I have, right around $24, and that should be a great first entry point into Rigetti. Next up, QBTS, pretty similar. We've busted out through a couple different trend lines, have since now come back in from this impressive move on QBTS. You can see here from September 11th, the price of the stock has now moved up. And here, give me a second. Has moved up as much as 71%. Currently now trading after hours, still up 57% in only 8 trading days. Impressive, guys. Just huge move. But where things move up, they eventually will fall, guys. So be watching for support on this inclining trend line where price broke out from. It has not retested. It's going to be roughly right around $21.60 up to $21.70, depending upon when price comes back down into it. That would be the first level of support to buy. The more aggressive level, the more conservative will be down here amongst all this chop under $20, right around $18.50. And that could be a great place to add to the position at that time. Next up, IonQ, last quantum stock we're going over. Notice how all these charts look pretty similar, except for this one here has completed a measured move all the way through this target here, 65.02. Now, we've done a great job today also moving up, testing this inclining trend line that you see here from a pivot back in September of 2023, carried over to the pivot in January of 2025. That's the area that has held price down, at least for now, considering we've got a time count plus an extended move on the chart. We likely are putting on the brakes and coming right back in. First area of support, the most aggressive, I'm not going to be a buyer here, is at $65.02. The more Goldilocks area will be a pierce of $60, right at $59.26. But I keep these other support levels on the screen for a reason. Take a picture of them. The way quantum stocks move can really be volatile. So you've got to be prepared if these support areas get breached, that the next support areas can also be tagged, and which would be great areas to add to your position if you did open one right here just under $60. All right, guys, a lot of tech stocks in trading and close today. A lot of fun to go over these because there's ample opportunities. If you miss one run, no big deal. Sit back just like I've described in the show. Wait for the support levels to come to you, then get into the play. take advantage of a nice 10 to 20% pop, get out, then look for another pattern and rinse and repeat. Do it all over. And we're going to do it every single day, every week here at Verified Investing. Guys, thanks for tuning in. Don't forget to like and subscribe. Share the video with your friends. Help them to become financially independent. Can't wait to have them join us, guys. Until then, you'll have a great day, and I'll see you all in the charts. Take care.